Okay, so what I want to talk about tonight is range structure, the part of structure, because I'm seeing some kind of confusion and different things concerning structure. So I'll just talk about it and I pray that we are able to assimilate it. So a range structure is a smaller structure in a bigger structure, a small structure in a bigger structure. For example, we have a bearing structure like this, and then after the break of this load, twice now start forming something like this. All right. Twice start forming something like this. Okay. In this same structure. So this is like um, a structure on its own, but it is part of this. It follows the same trend. All right. It follows the same bearing structure. So we have a structure break here, and we have a break here. All right. Now, some of us will now be confused like, should I count 1, 2, and then 3, and then 4, and then 5, and then 6? I believe this class is going to answer that question. As this is a range, like I told you guys, there are two forms of structures. There is trend structure and there is range structure. Okay. Yes, we know that the trend is bearish, which this bigger picture have showed us. We know the trend is bearish. Okay. But inside that bearish trend, there is a range. There is a structure range inside the bearish trend, which is usually like this. Okay. So we can say that the range structure is a lower time frame structure in a bigger time frame, structure following the same direction. So let's say we are in an uptrend, for example. So we can have something like this. This answers the question that GUC was talking about. I didn't really want to, I just dodged the question because I did not really want to start the whole class, the whole lecture thing. So this small structure here, it doesn't mean that because price took out this tiny thing that the trend has changed. There is a bigger picture. So price can come, use any POI for the higher time frame to continue, and we are still following the same trend. Okay, so we can have something like this. This is a range structure. All right, it is not part of, though it is part of the trend, but it is not part of the higher time frame structure that price is presenting. Okay, so you cannot count 1 break, 2 breaks, 3, 4, 5 inside the range. So this range can break after the 3, 4th break, whatever, and then still continue the actual trend. Okay, I believe this is going to answer a lot of questions. Yes, Mr. David Oko, I will drop it after this class, please. Only smart. If you can't hear me, please leave and join again. Every other person is hearing me. Thank you. Yeah. So as I was saying, so this kind of structure is traded differently. How do you trade this? Okay. So after the first break, second break, this is not part of the breaks. All right. This is not part of the breaks. For example, now let me show you an example. Now here, our higher time frame structure, for example, let's say this is the main structure. This big one is the 4 hours. Okay, is the 4 hours time frame structure, the big one. Why the small one, which is the internal structure, this range structure is like 15 minutes or 30 minutes or 1 hour. Okay, so for example, let me just show you guys an example. Now, if we say, for example, that this is our third break, and price took out the third break, and then our second break is here, our second demand is here. We are trying to see if the second demand will save price. But this is 2 hours, right? Now, but if you look at this place in 15 minutes, you will see a range structure after the break of low. You guys should pay attention to see what's happening here now. Now, this range structure, price ranged for a while before it went to a higher time frame to mitigate a point of interest. Mitigation is when price taps into a point of interest. Point of interest. When I say POI, I mean point of interest. For the new people that are with us, POI is point of interest. Okay, and it is where you are interested in to buy or to sell. Now look at this. After price broke this low, it started forming range structure. Okay, this is why you should not be rigid as per time frame. Always be quick to check different time frames. Don't just assume. You must check different time frames, lower time frames, to see what price is showing you. For example, now this is a range structure. It's a smaller structure in a bigger trend. Look at this. This is our second demand trying to save price. You can see the tiny structure here. This tiny structure. Now, the break of this structure, it doesn't mean that the trend has changed. Okay, the break of this small trend structure, it doesn't mean that the trend has changed. Please, it's so important that you guys know this. It doesn't mean the trend has changed, but you can trade the range structure, this small range structure, on its own. Okay, you can trade it and target a higher time frame point of interest. That is targeting as a bearish trend. Now you target the immediate sell of a higher time frame. Okay, you don't use this second break here to determine the change of trend. No, please. Okay, so even in this range structure, you can still count your lows. You can still count your break of lows. Okay, you can still count your break of lows. Still count your break of lows, please. After the third break or the fourth break or the fifth break, price changes and then goes all the way to take out the start of the range structure, the beginning of the range structure. Okay, should be your first point. Okay, or you can target a higher time frame immediate point of interest. Let me go to 1 hour to see where I'm at. You can see that, okay, it used this, took out the whole structural range and then the whole range structure, and then it came all the way to this fair value gap in 1 hour. So that's a higher time frame point of interest. So if you are trading such structure, look at the nearest higher time frame point of interest and take yourself out of that trade. It doesn't mean that the trend has changed, please. Concerning the question that pretty people asked, I believe this have been able to answer your question. I didn't want to talk about range structure before because it's kind of complicated, but I still have to. Now, if you look at what happened here, it's a range structure. Let's, I don't like going to using 5 minutes, but it's 5 minutes that will present it better, so that you guys will know that it's not um it's not just about marking. You need to know what you're marking. Always be flexible. Always check multiple time frame. If you are the type that is very flexible with time frame, there are some questions that you will not need to come and ask me. That's just the truth. If you are able to go to different time frame to see in details, look at this now. It doesn't mean that because you are using, okay, you are using 5 minutes. No, but nothing is wrong with using 5 minutes, but I don't always advise people to use 5 minutes because 5 minutes is too loose. If you are using 5 minutes, you see that okay, after this impulsive break, it doesn't mean that because price have changed, price have broken this. This is even the second supply. Okay, let's count. We have one break, two. This is range structure break. It doesn't mean that because we are trading a bearish move that we are now going to, okay, fourth break. So the second demand, after the third break, what happened? Price took out the first demand, used the immediate fair value gap to react, so to give a fourth break. All right. So now, as price have taken out this range structure, it doesn't mean that the trend has changed. Please, you have a bigger picture. What you should do is, as this small structure have been taken, target the nearest point of interest in higher time frame, because it can go against you. Let's check for more examples so that you know what we are doing. Doesn't mean you, before, because you see 5 minute change of inside range structure, you now want to go and be using to target daily FVG or whatever. Just target the immediate and then leave. If you want to sell, wait for the range structure to be broken. If price is creating such range structure, wait for the range structure to be broken. Target the immediate sell POI. Okay, because it's a bearish trend, just like here. If you want to sell, instead of buying the range structure, wait for price to break it, target the nearest sell, but you must wait for the break of the range structure. Okay, so sorry, let's check another example, please. So I just wanted to make this clear so that you guys are not going to be counting range structures with what they call it. Don't go and be counting range structure with the original trend. No, it doesn't work like that, please. Just like here now, when I said here, this is second demand zone, price just wicked it and then started buying. But there's a range structure here. Okay, it's a smaller trend in a bigger picture. So always be flexible with time frames. Don't be lazy, please. Don't use one time frame to analyze and then you are now asking multiple questions. Always be flexible with time frames. I know I've not taught time frame, but always check different time frames. As you are analyzing, always check different time frames. The information that you need, you will see it that you wouldn't need to ask most times. Okay, let's play with an uptrend, for example. Let's see what an uptrend is presenting. I'm not looking at we're talking about only downtrend. You can see here, okay, You can see here, after price rated the low, started forming range structure here. Look at it. Started forming range structure here. This is a lower time frame structure in a bigger picture. I've already marked the POI I'm waiting for in 4 hours. Alright. Okay, the second point of interest. But this range structure here is a smaller structure in the bigger picture. Okay, and it can break, but where you should be targeting is different. You should be targeting the beginning of the structure or the nearest sell point of interest if it is a sell. Here you can see it. You should be targeting the beginning, but where the range structure started. That is if it breaks, if it changes trend in that time frame. Okay, or the nearest sell point of interest. That's where you should be targeting, as long as it's a range structure. Alright, doesn't mean that the trend has changed. Let's check for another example for a bearish move. Just like here now. Okay, so we have a break of high. Look at this. In higher time frame, let's go to 4 hours. Let's go to 4 hours. So this is 4 hours time frame. And we said, according to what I taught you guys, that each of these breaks, look at them. Okay, we have a break of high, we have a break of high, we have a break of high, right? Now, you can see that each of these break in the higher time frame is very clear. But if you go to 15 minutes, you will see range structures in some of them. It doesn't mean that the trend in that, because that one, the range structure, because it has been cleared, that everything have turned bearish. No, no. There is a higher time frame trend. What you should do with your lower time frame, maybe you want to sell the range structure after it breaks, is don't target more than the higher time frame point of interest. And that point of interest can be fair value gap, it can be order block, it can be whatever it is. But if you are doing ranging, don't target more than the fair value gap. After price broke the high, started forming range. Doesn't mean that as this one is here, so this small thing is here, that when we've counted this break, that we say this is a break, and I'm not going to be counting this one, this small one, 3, then 4, then 5. No, it doesn't work that way. I don't need to explain range to you guys. You guys know when price is ranging. I mean, it's not necessarily a range, but it's just price moving in a pattern that in a bearish trend, a bullish trend, you can see that it's still moving in a bullish form. In a bearish trend, it still moves in a bearish form, but it's not part of though it's part of the trend, but it's not part of the structure, the trend structure. Okay, it's just a range structure in a bigger picture. I've showed you guys the bigger picture now in 4 hours, but you can see the small structures that are inside the bigger one. So when this is cleared, you can see, I don't know how you are going to trade this, but if you are going to trade this, don't target more than the higher time frame POI. Okay, can you guys still hear me? think something just touched my headphone and my earpiece. Okay, all right, cool. Now, if you look at this structure here, after price took out this high, I showed you guys a bigger picture. Did you see anything like this? No. So because you now came to lower time frame now, it doesn't mean that you should now come and be counting this highs with it. This is just a range structure. Alright? And for you to trade it, you just have to target the beginning of the structure. See now. Or else you will not be able to enjoy even trading. Just target the beginning of the structure, the range structure. This is even the beginning. See it. See the range. You can see that we're still dealing with support and resistance. So that's why I taught you guys the foundation. But if you check higher time frame like 4 hours, you won't see any of this. So please don't be adding those small structures with it. You've marked out the higher time frame structure. If you want to deal with the lower time frame, it's usually a range structure like this. It's not part of the trend. Let's check EU for an example. It's just like here now. Here, this is what? This is 1 hour. We go to 4 hours, for example. If we go to 4 hours, what do we see here? You can see the breaks. Look at it. Look at it now. So that you will know what you are doing, please. You say, okay, so this is a break, right? This is a break. Now look at this. This is another break. That's one, two. Okay. This is another break. You are seeing the obvious break now in 4 hours. This is another break, right? But now we've accepted that okay, this is break, this break, this break. But if you go to a lower time frame now, like 15 minutes or 30 minutes, you will see a lower time frame structure. Alright. Something like this now, you will see it. Look at it. Alright. This is a range structure in a bigger. It's just a smaller structure in a bigger one. Was it obvious like this in 4 hours? No. It's not part of the major structure. So after price broke it, what happened? Like I told you, target where the structure started, where the range structure started, target it and leave. Alright, or target the nearest point of interest in higher time frame. That's the safest way. So you can see that this is not part of the original trend. See where our break is, the higher time frame break. See where it is. So please, let's take note of that, please. This should answer a lot of questions regarding stock and the confusion. Okay. So, Mr. Pretty Pose, does this answer your question concerning what you just dropped concerning your last 100? Please come to the group chat and answer if it answered your question. All right, cool. Okay, so tonight let's just talk briefly concerning the fair value gap that so when I want to title the recording, I will just say range structure plus introduction to fair value gap, as I mentioned. that I will talk about it tonight. So the fair value gap um, is also called imbalance. Imbalance. Wherever you see FVG, as long as trading is concerned, it means fair value gap. Okay. So they are created due to the aggressiveness of price of sellers against buyers, buyers against sellers. Okay. So these fair value gaps, as they are created, they can act as buy zones, they can act as sell zones. That means they can act as points of interests. Okay, point of interests, and they can be visited for sale, can be revisited for buys. And I also talk about how to identify the fair value gap. I said, for example, I created these candles to show example. I said the candlesticks can be bullish, bullish, bullish. It can be bearish, bearish, bearish. It can be bullish, bullish, bearish. It can be bearish, bullish, bullish. Anyone, as long as there are three candles. That's how the setup is. So you look at the wick of the upper candle, the lower wick of the upper candle, and then the upper wick of the lower candle. All right. If there is an opening in the middle, that middle, that opening is what we call the fair value gap, nothing else. Okay. And I also showed us an example. All right. I said to look at these three candles now. The upper one, the lower one. You can see the lower wick of the upper candle, the upper wick of the lower candle. You can see where it is there. Created the fair value gap in the middle. And I also said, if you look at this long candle and this bearish candle, the lower wick of the candle and the upper wick of the lower candle, created a fair value gap here, which price used as a buy continuation. You can see this bullish candle, it tapped into the fair value gap. It tapped into the fair value gap, and then price started buying further. You can see the same thing here. Price wicked inside. Sometimes price can close inside it. It doesn't mean that it must always be wicking. No, price can close inside. I also gave a bearish form that price using it for sell. As you can see here, price closed inside the fair value gap, yet it still used it to sell. It still sold. So that is what I said in our last class. So tonight, I've already talked about, I've talked enough for tonight. I believe I've been able to clarify something which is so important. On Wednesday, we'll talk about what I use the fair value gap for, and inversion fair value gap. I also talk about that. Okay. So in our next class, we'll talk. Do anybody have any question regarding tonight's class? Please, you can drop it in the group chat. Sorry, Mazi FS. I don't know why it's us showing imbalance and momentum imbalance are. I don't know what that is. Wherever you heard that from, you can look more on it and know better. I don't know such things. I just trade fair value gap and liquidity. If you have questions for tonight's class, please ask. Toby cares. Ask now. Ask your question if it's about structure. Ask your question. When can we say a trend after? Why are you asking this now, Shu? What do you mean? Have you not been following the structure class? Is this guy for you? When can we say the trend have changed? It's when the second demand or the second supply have been taken out. Not of a range structure now, because I'm talking about range, because I talked about range structure today. It's not listen, trend changes, for example, hold on now. For example, let's say these are 4 hours trends, right? This range structure is not the trend change. It's not the breaking of this the range structure second supply that trend have changed. No, it is the trend structure. Why is my what's wrong with my network? What's going on? That's my tool not working. See, this is not it's not inside the range structure that you'll be looking for trend change. It's the trend structure, the big one, the bigger picture, all right, that you'll be looking at to say, okay, if this is the second supply, is when price raises out, that's when you will. So, for example, now, for example, just like I counted this third break, this trend would have changed if price had raided this demand out, because this is the last low before the second break. I've talked about this in the first structure video. You can go and watch it to know the foundation of what I'm teaching now. So let's say this is our second break. This is our last low before the second break. This is the second break. Look at it. Second break and then the third break. Okay, the third break. Now, instead of price to take out this third break and then use any POI on this second demand trend, this old trend, you can use any POI on it. It will now come and read it out. The reading of this low and a close below this low would have changed the trend. Would have come price would have come all the way here. Just like here now. This is my second demand. Price wicked it. Okay. Now if price had closed below it, I would have considered that the trend had changed. Okay. So but there's a range structure inside. It's not the change of range structure that changes trend. It is the change of the trend itself, the trend structure itself. So that you'll not be confused. I've taught you how to trade the range structure. So I cannot go back to that. So go and watch the beginning of the structure class. Said, in our next class, we'll talk more on the fair value gap. This is just like introduction. Please, Toby cares. Please make sure you follow the classes, please. All right. I know that some of us are busy. Okay. Some of us are busy. Please try as much as possible to follow the class. You know you paid for it. All right. Do we have any other questions, please? All right. All right. Toby cares, no problem. Okay, so we are done here. Plutos. Yes, if you have 3 FVG, don't worry. When we're talking about liquidity and inducement, or maybe next class, when we are talking about the fair value gap, I will I will talk about that. Okay, there's a way that you can trade fair value gap that don't have liquidity, and there's a way that you can still trade fair value gap with liquidity. Okay, Mr. Plutos, it's not one way. You understand? You can trade fair value gap with engineer liquidity, you can trade it with liquidity, but I don't want to go into that now because of the new people with us. They will get confused. So when we are talking about inducement or engineer liquidity, we will talk about most cases where we have multiple fair value gap. Okay, just ask the question again when we are talking about inducement or engineer liquidity. All right. Toby cares. In an aggressive trend, yes, FVG is more powerful. But in a ranging market, demand and listen, please. Let me get something straight. FVG can be used as a demand and supply zone. Please. Fair value gap can be used as demand and supply zone. A fair value gap is also a point of interest, just like other block, your OB that you mentioned. So your OB is a point of interest, your fair value gap is a point of interest. OB can be used as demand or supply zone. Fair value gap can also be used as demand or supply zone. So please understand that. Don't carry this. You are part of my mentee. Don't carry this thing outside. Then I'm not gonna say it's Lex. Lex, now this one Lex they teach you. Please correct that. Fair value gap, other block, breaker blocks, blah blah blah, they are all points of interest. They can be used as supply or demand zone. A demand zone is where you are buying from, a supply zone is where you are selling from. So if you are selling from a fair value gap, you are selling from a supply zone, but a different point of interest. Please. So in an aggressive trend, fair value gap is more powerful in an aggressive trend. But in a ranging market, other blocks, because there are not much participants. Other blocks are more used in a ranging market, but in an aggressive trend, fair value gap takes the lead. That's the end of tonight's class. Thank you.